I wasn't ready about 45 minutes ago, but I'm ready now. And so just like any other week, the strategy itself is so clear cut that even if I'm not 100% there mentally, it doesn't matter. We always talk about how important trading psychology is, but I do want to let you know that trading psychology gets a lot easier, and trading psychology takes a back seat once you understand your system. Once you have a clearly defined edge, so you know exactly what you're looking for, and you have a clearly defined entry and exit strategy, it makes it easier to wait. Having patience is a lot easier when you know what you're waiting for. Good morning, everybody. If you're just tuning in on YouTube, welcome. I think that we're officially live on YouTube. Got to double check here. Yeah, we are officially live. Okay, so yeah, I'm already in this buy position here on NASDAQ. Let's go ahead and gonna mark this off for y'all. Doesn't get any better than this. Same exact trade idea I looked at on Sunday. So there's two opportunities here. Every time I gotta mute everybody, I gotta pull up this side screen that you guys can't see, and it's always hidden behind my other pages. Okay, here it is. All right, two options. We have this local floor here, which is essentially the low of last week. So there's the weekly low from I think this is past 2 weeks actually. It's from the beginning of the month. So this is the monthly lows for February. We're retesting here. And so if anything, we're going to get that rejection at least to the first take profit level. But if there's another opportunity, it could be this larger impulse to come back for a pullback. Okay, so it's the same exact levels that we talked about last week. I actually see both of those trades being a possibility. So I see us getting this rejection today. And then I think we head lower to 17,250 for that second entry later this week. So we have two trade opportunities. Right now, I'm taking a buy position at 17,500. If the market breaks through, there's another buy zone at 17,250. We have Nvidia dropping their earnings. I believe it's next week, and so kind of all eyes on that for the tech sector. In case you guys don't know, Nvidia has surpassed Apple as the largest market cap company in the stock market, and this is relatively it's strange. It makes sense, but it's also strange. So back in 2020, when there was too much money sloshing around the system, you saw companies getting 30, 50, $100 billion valuations, or you saw them getting liquidity injections of 20 billion and 30 billion, these astronomical numbers. But that's because they were trading, sometimes they were trading way above what they were earning. So you look at Nvidia, which is generating, I think, $18 billion a year, but now it's being valued at almost multiple trillions. Something is a little fishy there. But if you're betting on the chip revolution or you're betting on the competitive advantage that Nvidia has, it makes sense that they are now the largest company in the stock market. So the question for everybody who trades NASDAQ or who's looking at stocks is the hype over? Is the hype going to continue for Nvidia? Is this a bubble or is this a genuine valuation? If everybody who invested got way ahead of themselves, we're going to see a pullback soon. Because the NASDAQ is basically moved by the top 7 or top 10 names, and Nvidia being the largest one, any changes to the sentiment around Nvidia could crash the NASDAQ. So that's become my biggest focus. Obviously, we look at the top 10. So you're looking at your Apples, your Microsofts, your Teslas, your Googles, your Meta. But I'm also looking at especially the industry leader. Okay, so big focus on Nvidia this week and next week, and that's going to kind of help give us a sense of direction. All right, let's go through some quick reminders before we start trading. Everybody here has a unique experience with trading that has left them with some positive habits and some things that could potentially hurt you when it comes to trading. Look at the top 3 priorities that you have as an individual. So whether it's not over leveraging, it's sticking to your system, It's sticking to a few trades a day. It's avoiding certain trading instruments. It's getting off the charts after a certain time. Whatever your unique priority is, remind yourself of that before you start trading. If you don't, then your brain is gonna go directly to, is this trade gonna play out? I hope this trade plays out. I want to make money. I've already lost X in a row. I want to make it all back. I've already won so many in a row. This one's probably going to be a winner. If you don't have a clearly defined set of priorities, your brain's always going to your brain's always going to revert back to default. And default for a trader is, how much money can I make? I need this trade to play out. It's basically thinking from a framework of certainty as opposed to a framework of probabilities. And whenever you need a trade to play out, or you like the market has to do something, that's where you put yourself in a danger mode, because setting unrealistic expectations is what leads to disappointment. By the distance between your expectation, what you thought was going to happen, and then what actually happened, this distance here is called disappointment. So if you're telling yourself this trade has to pull, this will reject, right? Like it has to reject because you know the strategy. And then it doesn't happen. Then all of a sudden you get disappointed and it affects your future trades. Realistic expectation says, number one, can anything happen at any time in the markets? Yes. With that being said, are some things more probable than others? Yes. Is the market obligated to do anything I want simply because I'm in a trade? Does the market owe me money because I spent 4 hours on the charts today? Does the market owe me money because I've been trading for X amount of years? No. Does the market owe me anything? No. When you start to look at trading from a realistic standpoint, a lot of the discipline and mental strength that you normally have to use kind of goes out the window. So for this trade, for example, the market is either going to break this low right here or it's not. So if it breaks that low, then my trade is invalid and I will enter at the 17,250. If the market dips through a little bit and then wicks back above, the trade is still valid and I will potentially enter a second position on the retest. So even though there's 15 ways the market could break to the downside, and there's about 5 ways the market can make it up to target, instead of me focusing on those possibilities, which is, all right, first it's going to have to reject this candle, then put up another candle, and then this candle has to close above the high of the previous one. That adds a level of complexity that gets me out of the opportunity flow state. Instead, if I leave it binary, meaning there's only 2 choices, then yeah, it could look different. It could have 15 variations of how it rejects or how it breaks. But those are the 2 very simple kind of, those are the 2 highest probability things, right? The market's going to break through, and so the trade's not valid, or the market is going to play around and then break back above, in which case the trade is valid. So it either is or it isn't. And that's how simple trading should be. All right, we'll go through other pairs real quick before this thing gets started. DXY is still on a pullback, which I think is much needed. We talked about this on Sunday, but I'm expecting a pullback inside the range, so around 103.2. And then if we reject this area, if we reject that area and close back above the 103.7 highs, this thing will continue to the upside. If we break under the zone and then we close below this low, then the market could be coming all the way down for an extended pullback. So right now I'm actually waiting for the DXY. I do expect some sort of rejection and a continuation of that bullish trend, but I do need to see the next few daily candles close to see if price is going to respect that zone and hold support or inevitably break to the downside. This is the US 30 trade from last. US 30, I still see a continuation to the upside. I'll get back to this in a second. This is about as simple as I can see it. It looked a little complicated at first. And granted, I am tired of shit, but I see 2 possibilities here. Why is that so ugly? Interesting. So personally, I know it was kind of silent there for a sec. Personally, I was looking for longs around this area. So you guys can see the body and the wicks right here of these candles. Whenever the market has done something consistently at a price level, so you guys can see here, buyers stepped in. There was a massive liquidity push, but then buyers stepped in and the body of the candle closed above that zone. We have a lot of candles rejecting here, and then we have this big impulse off of that same level. Obviously, big liquidity grab here, but then recovery back above that price level, retest, body of the candles closing above, body of the candles closing above. I wanted to see a pullback to that same exact buy level for continuation. What I saw here, though, is that on like a local level, if we look at the 4 hour, if we're looking at higher lows, excuse me, higher floors, and then higher ceilings, the market has already established all these different levels, and then right here we're establishing a new support based on this previous impulse. So we have the beginning of the previous impulsive move right here, a push in the direction of the trend, pullback, beautiful rejection. And so if the market stays at this level at 38,450, this could be the perfect entry for to take US 30 to the top of the range. So the trade would be from the retest of 450 all the way up to 750, about 300 points there. Stops would be below this wick at 400, so it'd be about 50 points of risk on the downside, but 300 points of risk on the upside. Let me double check if that's true. Okay, so the stop would have to be around 380 actually, which would put us at about 75 points of risk. It's still a 4-to-1. You might have to extend the stops just a little bit. I don't think we'll need it. Here's my thought process, because if it goes down and then breaks through this level, then it's probably going to head down to these lower price entries, and then we can catch another entry here. Holding 300 points of drawdown, not something I'm personally interested in. I would rather take two trades, risk a 0.25% here. Okay, if that isn't, if that one isn't successful, you take a re-entry with another 4-to-1, maybe even a 5-to-1. So if you risk a 0.25%, you're looking to make 0.75% or 1% back on this trade. So you lose the first one, you can take the second entry. That's one way to do it. Okay, we'll follow up with that in a second. Yeah, gold. What a beautiful call. It's one of those calls that was so beautiful. It had me considering trading gold again. And then the rational part of my brain comes back and it's like, no, you idiot. No, no more gold. I made a promise to myself to not trade gold after I think it was 2021, maybe early 2022. And I've been sticking to that promise. But we called this trade, I don't know if I screamed this from the rooftops at this point, from the 1997 area. So price did break through. I said to wait a bit before you enter. But there was a beautiful retest, 1995. This is the year some of you guys were born. And then now we're at 2027, which is about 30 points away. Beautiful rejection and beautiful higher time frame move. All right, my final target for this gold trade is 2060. Let me get this accurate here. 2065. Is anybody still in this gold trade or what's up? It says pull back on gold. Well, this was the prime entry right here. And the market is basically at what I would consider my exit if I was in this trade. So would I buy here? Hell no. No shot. Would I buy from these lows if we get a pullback? Of course. 2007. All right. Great financial crisis. 2007. That would be an ideal entry. So there's two ways that the markets typically continue. Like you'll kind of break just above the previous local high, come back in for a pullback, and continue. The second one is no pullback, before you break this area. Instead, the market continues to push bullish and then comes back into this zone for a pullback. And that's where you can take the entry. So either we get a pullback right now and we can enter, or we wait for that break and then wait for the pullback and enter. I would vote for option number 2 right here. Okay. Any questions, comments, concerns? Pretty straightforward stuff. All right. Someone said, "Are you using DX trades? That shit is garbage." All right, chill. Oh man. Yeah, it is. DX trade sucks. C trader fucking sucks. They don't suck, but they do suck. They all take some getting used to. It's a new platform. Look, you don't realize what you have until it's gone. Have you guys heard that saying? You don't appreciate something until you don't have it anymore. That's how I feel now about MetaTrader. It's like last year when we almost got kicked off the App Store. Well, it did. MetaTrader did get kicked off the App Store. I started to think about the fact that, this is a really shitty user interface. And the fact that they have a monopoly, even though they're the worst platform I've ever seen, like, how is this even possible? And then now we're using these complicated ass platforms. I just want the simplicity of MetaTrader, C Trader, and Ninja Trader, and DX Trades, and everything in between. What are we doing? And I'll be honest, a lot of people have something to say. I think TradeLocker is a pretty good competitor for these folks. You guys have seen me trade on TradeLocker live on here. Now, clearly, it depends on the brokerage you're connecting to, but the platform of being able to trade directly on like a trading view type chart is still cleaner than the rest of these platforms. So I don't know. I'll say I'm hoping, but yeah, I am hoping they pull that one off. DX website is down half the time. Yeah, and their app doesn't fucking work. But then again, did a lot of these companies expect this much customer traffic in a short amount of time? Well, if I was a legit company, the answer would be yes. We build things for scale here at Chart Addicts because God forbid this great thing you're building blows up like it's supposed to. And the biggest thing that kills these up and coming companies is not being able to handle scale. And so that's what I think is going on. These guys did not anticipate being a winner, right? Didn't look far enough around the corner at these regulatory risks. And now that they're having to onboard all these new people, they're having new issues they didn't expect. Now I have sympathy as a business owner and somebody who's innovating in this space. I understand this shit's not easy, but they're an opportunity of a lifetime land. And so I really hope they get their shit together and they don't drop the ball because they have all eyes on them. So come on, let's see what they do. We sell where we gold sell or buy. The fuck does that mean? BTC review. I'm in some drawdown on this position right now, just to let everybody know. I am sitting in some drawdown. Just a bit though, nothing too crazy. All right, there's the lows. So I just remeasured my fib from the break. So everybody kind of sees what's going on here. I redrew my fib from the break, and then we're basically right at that lower 886. And I think that this one has a pretty good shot of seeing the rejection because we just grabbed liquidity from everybody who was sitting on entries from the past 2 weeks, who had just kind of been waiting for that swing position. And we just dipped right below it to grab all that liquidity. So this is kind of like a now or never situation where the market has done everything it needs to be for a fake out or for a liquidity grab. It's already broken through the lows, activated the sell stops, and potentially hit a lot of people's tight stop losses. Because if they entered at 500 here and they only put, let's say, a 10-point stop or 20-point stop, they're already out. And so this is kind of a now or never thing. The market doesn't reject from here. Very good shot or very good chance that we break this low and we head down to the 17,250 buy level. So now or never. We'll let this thing continue to play out and let's see if we get this rejection. See if you guys have any questions here. Any questions at all? It's a good problem for them. It is, but the reality of starting a platform where you have issues with onboarding, especially when you have scale, is that sometimes people give you credibility based on their first impression. So you have a massive rollout, everybody tries to get on, the website doesn't work. Now I've heard tons of stories that that's boosted their business and it created a ton of hype because we had so much traffic, the website crashed. In reality, you guys all know this. You hop on a website because someone told you about it. If it's taken too long to load, if the thing is just janky and not working, you're off that site in less than 30 seconds. So people will treat you based on, by the way, I'm entering a second position here for NASDAQ. I'm going to show you guys right now. I'm paper trading this just so I can give a demonstration. Um, yeah, I'm going to be showing you exactly where I just entered on my phone. So you guys can do whatever you want. Again, this is not financial advice. Make your own decisions. Proper risk management is key. And yeah, those are my disclaimers. Yeah, good stuff. Anybody have any questions? Anybody have questions? Questions? Let's go through Forex Factory real quick and see what news we have going on. I think all the macroeconomic news kind of got overshadowed by the Nvidia sort of like hype that we have. Okay, meeting minutes dropping at 2 p.m. This should be a slight market mover. It doesn't really matter what they say in the meeting minutes. More so, I think the market is going to use this as an opportunity to make a massive move. You said that's tomorrow, Wednesday. Oh, today is Tuesday. Thank you, Leo. What am I looking at here? Oh, I did the 2-week version. Okay. No wonder. This is February. Huh. Okay. FOMC Waller speaking. We're at um the Notre Dame Club of Minnesota. Okay, yeah. As if that matters. PMI, unemployment, not existing home sales, I'm interested in. This is a pretty good measure of consumer sentiment. It's kind of one of those like the last thing to crack kind of deal because a lot of people will list prices. You can see home prices staying elevated. You can see new home constructions and you can see demand in the market. But when it comes to just the bottom line, it's how many people are actually buying homes or have homes under contract. That's the most accurate measure for housing stability or for housing demand. So it's going to be a big one right now. I hit my TP at 2030. Good stuff. Congratulations for everyone who took that gold trade. NASDAQ still cooking. It's doing its thing. Gold looking beautiful. And then let's look at Bitcoin. Bitcoin broke that 50K and has been on an incredible run. To be honest, I'm expecting a pullback. I just don't know when. And this hype train doesn't have to end anytime soon. So this black line here, I keep having to remind folks, is the Bitcoin halving. It's an event that happens every 4 years where the supply of Bitcoin that miners receive as a function of every block that they mine, how much Bitcoin they get for the work that they're doing is getting cut in half. So you still have all this Bitcoin demand because of the ETFs, a lot of the hype because it's constantly on the news. And then you have limited supply because obviously it's a limited asset. And you also have the halving coming up where supply is going to get cut in half and mining will get twice as expensive. You see holders versus traders. So the amount of traders is getting lower and lower. So more people are choosing to hold their Bitcoin. This does not have to end soon. However, you look at previous cycles, typically what happens right before the halving is we see a pump and then we see a flattening out around the halving and about 140 days after. And I have this marked off here, which puts us right around November. That's when we start to see the continuation in the beginning of the next bull cycle. So I am waiting for one more dip. I do have some cash on the sideline, and I've stopped my recurring buys on Coinbase because I want to wait for a dip. Buying at 50K doesn't really do much for me. We go to 100, I double my money, which is great. We go to 200, I quadruple my money, which is great. But I definitely want to wait for a pullback so I can maximize my returns. We're seeing this rejection, but so far, so good. So far, so good. I'm in profits. So I'm in profits on the second position, but not the first. So it's still a patience game. You guys know the drill. Why is MQ banned for customers? So CFD trading for Forex is technically illegal in the United States. These offshore brokers allowed United States clients to be able to access the FX markets with high leverage. MetaTrader was facilitating a lot of these brokers doing this activity where they're registering offshore and kind of catering to US clients. It seems as though MetaQuotes has gone under regulatory pressure from the United States, or they see what's happening and they're expecting regulatory pressure from the United States. And so they're getting ahead of the curve, or they're responding to pressure by basically purging all of this questionable activity from their platform. And so how does that, what's the result there is you have these brokers, like you have, 8cap and a bunch of other brokers that were kind of white labeling other brokers. These brokers were connected to prop firms, and these prop firms were white labeling other prop firms. And this whole charade was all running on MetaTrader. So MetaTrader came in, saw what was happening, and they kicked off the top of the stack. Okay. So like the tier 2 or T3 liquidity folks, tier 3 liquidity folks that were sort of like kind of underpinning this whole operation. And then by kicking off the main guys, you kind of take out the leader of the leader of the cartel or the gang, whatever, and then kind of the generals in the floor and the kind of the ground soldiers start to go down one by one. And so that's what happened. ACAP, Think Markets, Purple Trade, all of them started to, stop accepting US clients. And then one by one, the prop firms are having to move away from MetaTrader. So you see some firms have an alternative to MetaTrader, and that's what they're choosing to do. That's why you can see some firms are allowing US customers to continue trading the accounts because they have an alternative. Other folks did not have an alternative, and they just had to shut down completely from US clients. Now, there's a third problem where in the midst of all this happening, certain firms are getting hit with they're having issues aside from the MetaTrader thing. I think exposed a lot of the issues that they were having of not paying people out and some of the practices. This is one I'm going to talk about for sure because I've had my fair share of problems with Twitter people in the last month. And it really pissed me off because I would post something and they would have like 40, 50 comments right away, shitting on my life. Oh, bro, I'm making great fucking points, very reasonable arguments here. And it's like 50 bots every single time these people posted at me. And I started mentioning it, and then the bots started attacking my post. They'd be like, "How could you say we're bots? Do I look like a bot? Look at my misspellings. I am not no bot. I am not a bot." And you click on the pages, it's like 0 followers, 0 posts, 5,000 following, fucking activity. They're only replying to this one person's thing. Report comes out yesterday that that a lot of the prop firm owners are paying these like PR, like propaganda bot farms on Telegram to post under all their posts. And then what's fucking crazy is that these Telegram guys who were running these operations started to blackmail the prop firm owners. And then the prop firm owners were paying them through deal, which made it look like they were getting payouts. So some of these guys were like extorting the prop firms, because these guys had entered into an extortionist agreement with these scam bot farms to promote their firm. And these bot farms ended up blackmailing them and then they get paid out in the form of a payout. So they get to flex it. Like this shit is fucking crazy. You can't even make this stuff up. That's how they've been able, like, how do you drown out bad reviews? All right, you guys saw what happened last month. We got good reviews, bad reviews. Everything stood exactly where it was. It fucking sucks, but you have to stand up to it and you have to take some accountability. Paying bot farms to go out there and support you is fucking crazy. All right, you guys see the activity in the live chat sometimes when we're asking for engagement. Like, for example, I will ask a very, very sincere question right now and ask for your honest engagement, which is put something in the chat if you guys have made money on these live streams. And I want to show you guys the difference between real engagement from providing genuine value and making people thousands and thousands of dollars as a public service, like the amount of traction you get, versus if we were paying bot farms and shit to go under every post and just gas us up. Like you guys see how much work it takes to genuinely provide a value to people to the point where you would pull out your phone and drop a comment. Like there's a genuine amount of interaction that you have to have. There's a genuine amount of like give and take. I have to provide that value for you guys. Expect you grown adults pull out their phone and comment on YouTube. But then you got these posts where these guys will reply to me, and there's 100 adults talking about the greatest, the footsteps this person walks on is perfect. They can't do no wrong. Where the fuck did you find these people? Insane. Absolutely insane. But put something in the chat if you guys have made money on these live streams at any point. And if you take out your phone to just drop a comment, and all it takes is just drop an emoji, a number, a letter, anything. But just drop a like too if you gotta pull out your phone and do all that. I'll take a look at silver here in a second. I'm gonna say I'm sitting in some drawdown, but I am battling. I'm battling my demons right now. In drawdown on both positions, I am very confident in my system. That doesn't mean that I know the market is going to go my way. It means even if it doesn't go my way, I've accepted it because I understand exactly why I'm taking this trade. I accept the rationale and the criteria that I'm using to enter this trade. I've accepted and I've assessed the risk that I need to put on in order to take this trade. And I've accepted the possibility of loss because the markets are uncertain and there's no, what did I say? There's no certainties in trading. Anyone know how to take partials on the DX website? I'll leave that to somebody real quick to answer so I don't get distracted here. Let me see the comments here real quick. Roy has definitely made me lots of money. Hey, send your boy the bottle. Actually, no, don't send me a bottle. I'm good. Do you think Nvidia earnings after market tomorrow will do anything? So the markets are expected to fly after hours, and it's pretty smart that they're dropping their earnings at that point. I think we might see a sell-off earlier in the day just to kind of trick most people. And I think that we start to see a little bit of a sell-off around the meeting minutes. And then towards the end of the day, we start to see a bit of a recovery. And then after hours, price jumps freaking 10, 20%. So that's my expectations. How can you not make money off these live streams? Yuri, you're not lying. Okay? We got Felix in here. Notal, Reed, Aaron, Steve, everybody's saying they made money. Evian says ATM emoji. You know the vibes. Is there a fundamentals news that supports your entry on NAS? Fundamentals will never support your entry. Fundamentals can support your directional bias, but when it comes to like an exact entry price, that is the function of technical analysis. The function of fundamentals is to build confidence in a bias for direction and a bias in terms of sentiment. So which way is the market likely to keep going based on this information? Technical analysis is for the function of number. Yeah, obviously you can double check to see which way the trend is going. But technical analysis is also for the function of finding precision entry and exit. Okay, so to find the entry and exit price. So fundamentals is only ever going to give me like a directional push, but it's never going to give me an exact entry. It can help kind of help me figure out if there's going to be enough volume to get to my entry. So if I was waiting for the 250, for example, the question I would have would be, is there enough volume or is there a fundamental reason for price to draw liquidity right here to go and grab this and then push back up? And the answer is yes. Because of the Nvidia earnings and because of the meeting minutes tomorrow, if I was a market maker, this would be a perfect opportunity to convince the market that we're dropping, we're kind of breaking bearish, to start breaking through a lot of these local areas of support, entice a bunch of sellers, and then right after the news tomorrow, that's when we see the full recovery. So 250, that's this area very, very, very likely to get hit. I don't know if it's today, very likely tomorrow, but so is the entry that we're taking right now. We're basically at the low of the month. And then we have this key Fibonacci level from the break. I'm still expecting the wick rejection here. It's going to take some patience. But the highest probability trade would be at 250. So I look at fundamentals and say, well, the fundamentals means looking at data and just telling the truth. And that's going to be bullish, unless the Nvidia earnings are fucking horrible. But data releases, that's what's the volume push. So fundamentals means, is there anything different about the structural health of the economy? No. Is there anything different about market sentiment towards Nvidia or their earnings? No. But is there a data release that could spook the markets? And so we're going to see a massive sell-off? Yes. So data releases have an impact on the smaller time frames. The overall picture, the fundamental picture, based on the culmination of all the data, this gives you the higher time frame bias, and this gives you a bias on sentiment. Sam here again. Good to be here. Welcome. Welcome, 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 Sam. Sitting in this drawdown, not fun, not fun, not fun, but patience is key. Patience is key. Patience is key. All right. Patience is key. I took two trades. I took my first entry at 17,500. I took a smaller position, and then the market dipped lower to the 460 area, and I grabbed an entry. Looking at my phone here at 472. So I'm sitting in both of those trades in drawdown. I'm waiting for some kind of wick rejection, and the entry that or the first take profit I'm looking at is 17,640. 17,640. So we get a good, probably a 1-to-1 at this first take profit. So you can either close the full position or, I mean, obviously do whatever your plan says. For me personally, I'm going to close partials from that position and hold the rest if we get a rejection. Because right now it's not looking too hot. I'm saying it's not looking too hot. All right. Patience is key here. Patience is key. Patience is key. Patience is key. Oh, you guys can hear me talking out loud. This is basically how my brain works. All right, let's do some updates here. I kind of want to do a timeline. I went through, kind of looked at some the timeline of the prop firm. What do we call it? The Great Flood. All right. So just to kind of go through this piece by piece, early January is when FTMO stopped selling to the US. This was January 10, which at this point was over a month ago. It's crazy to think that it's already been a month. And it's also crazy to think it's only been a month. January 24th, Oanda launched their firm. At least we still have no confirmation about Oanda Labs, but it seems like they did start an offshore entity to try to hop on this wave. And even I think they were waiting for the key decision from MFF Global in Canada to see if they could enter the game. And I don't know, still haven't heard confirmations from their team. I hit up their customer service and still nothing confirming the Oanda Labs situation. So that's still up in the air. February 2nd, True Forex Funds, one of the top 10, biggest prop firms went under. MetaQuotes revoked their license for servicing US clients and other activities. February 7th, the funded engineer went down temporarily, but this was different apparently from MetaQuotes. They had an issue with their tech provider and now they're suing each other. It's I think it's Funding Pips. FX is their parent company. They had massive problems. February 9th, Purple Trading gets an ultimatum to stop supporting the prop firm business. And so one by one, the major brokers, so 8cap and the ones that are listed on TradingView, Black Bull, like these are real big brokerages who are supporting the prop firm space, were basically told, you got to stop working with prop firms or this is going to be the end of your business. And they all made that choice pretty clear. February 9th, Purple Trading dipped out. February 11th, Purple Trading ended cooperations with prop firms. So official, a few days later. February 11th, same exact day, Blueberry Markets is telling their prop firms not to sell to U.S. clients. Funded Next stopped selling in the U.S. on February 13th. So day after day, one by one. It just got worse and worse. The next day, February 14th, Black Bull stopped accepting US, or they basically cut ties with Funding Pips, which is honestly crazy how Black Bull was supporting Funding Pips this whole time. And like, it's impossible for these brokerages to claim they had no idea what was going on. That's the dumbest shit ever. Because you're giving these guys access to a demo server because it's all simulated. So you're trading on Black Bull or Oanda or any of these backend or Think Markets or 8cap, but it's a demo server. And it's like, there's no way these guys didn't know that they were creating 100 times more demo, 1,000 times more demo accounts than live accounts. They didn't see what was happening. And so I think they just kind of like, they're distancing themselves because they got caught, but not necessarily because they have an issue with what was happening. Because clearly they did their due diligence. February 15th, ACAP ends their cooperation with all the prop firms, the Fivers. I don't even know what the fuck that is. Think Markets is the next prop firm to stop selling to the US. Blue Guardian and Aqua Funded were a lot of their kind of sub companies, I'm pretty sure. Two per. It just started to get worse and worse from there. So basically, everybody's been kicked out. Some firms are still trying to sell to US clients. I think that's very dangerous. And I think that's kind of dishonest to people who are still buying challenges. I personally am not buying a challenge from any more of these US-based firms. I'm going for futures firms only, and the two that I have my sights on, again, I have not used them yet, so I cannot vouch for their efficacy. Okay, again, I haven't used them. This is not my personal review. This is review from traders that I associate myself with and that I trust. It's Apex and Top Step. Okay, so those are the two that I'm looking at right now. And I think futures prop firms might have another 4 or 5 months before they deal with issues, but I don't think they're safe either. I don't understand how just because you're a futures prop firm, you're allowed to just circumvent all the rules. It doesn't make sense. So learn how to grow a margin account. All right, it's the bread and butter. I understand that like I've made a shift from trading a margin account to trading prop firms because of the leverage. I'm not talking about your 1 to 100, 1 to 500 position leverage. I'm talking about the leverage of spending $200-300 and getting access to $5,000 to $10,000 worth of margin. So I think that trade-off is here to stay. Whatever the model looks like next, I'm sure that we'll be ahead of the wave. This is your reminder, everyone, that the FX Summit 2024 conference is in November of this year. It's going to be in Dubai. Obviously, Expo City is the prime location that we're looking at now. Obviously, we could shift over to Festival City once we start getting the numbers in. The reality is, if we're expecting more than 5,000 people, we have to get a venue that incorporates everything that we need. And Festival City right now looks more attractive. They offered us something that's way more beneficial. They have a whole mall there. So for shops, restaurants, going out, you don't have to travel far. And so we're taking that offer very seriously from Festival City. But that aside, November 15th to the 17th, we want to see every single one of you out there in Dubai. Whatever the future of the Forex space is, they're going to be here. So we're going to get to hear from TradingView. We're going to get to hear from the folks that started Oanda. We're going to get to hear from some of the major brokerages that show up and speak. We're going to get to hear from the biggest tech providers, the biggest analytics companies, market makers, floor traders, brokers. I already said brokers. We'll do that again. Prop firm CEOs. They're going to come and speak. They're going to come and sponsor. They're going to come have exhibits. And the opportunity to walk around and see what's next and see where the prop firm space and where the trading industry as a whole is going to be moving in 2025. I think that is the opportunity of a lifetime. So this is not just to come and learn stuff, because clearly, getting MetaQuotes and TradingView and Oanda all in the same room to come share value and come tell you guys from their perspective what's happening, that's hard enough already, and it's very impressive already. You're not going to find that on YouTube. But on top of that, going to see the innovation and seeing the industry leaders and the winners of the next generation, that I think is the big advantage. Getting ahead of the curve to figure out what the next play is. The folks that found out about prop firms in 2019, they were hitting leaderboards in 2021 and 2022. Those of us that found out about prop firms late at the end of 2020, you had like 2021, 2022, and 2023 to start hitting the leaderboard. So a little bit behind that first generation. Some of the folks that were part of Gen 1 for prop firms are starting their own prop firms now. And now the Gen 2 folks in this next cycle are going to be starting their own companies. And kind of, this is how the evolution goes. So looking forward to seeing everybody there. Tickets are discounted for early birds. We are announcing the first speaker as soon as that Instagram post that we put up hits 1,000 likes. So get that Instagram post to 1,000 likes if you haven't already. And we'll be announcing the first opening speaker for the summit. And then as soon as we announce the first speaker, we'll start to drop the names of the sponsors and the exhibitors as well. We have a full stack of exhibitors that have already registered. I'm very excited to go out there to Dubai with them and to, really just to show you guys the trading space is so much bigger than we have credit for. I was talking to some industry insiders and I was trying to figure out, because we were talking about the migration. And I always like to have my finger on the pulse of just how everything in the back end is working and how it's moving. And I asked them, because clearly it's a lot of work to migrate all these accounts over. And obviously, if people have open trades, it's about to be a mess when you take down the whole house of cards at the same time. So I was asking them the migration process, technology, scalability, data, privacy, and everything else. And we were going through the number of accounts that different firms have. All right. And I'm not going to go through a lot of the personal data that some of the folks that I talked to shared because I ended up verifying with them. But it's estimated that FTMO had 900,000 active accounts right at the migration. 900,000 active accounts. Now, I don't know if that is a combination. Clearly, it's a combination of challenges and live, but I don't know if that also includes demo challenges. I don't think it does. They said active accounts. Maybe that's just the amount of people that have a login and not currently doing a challenge. But that's a lot of fucking people. And if you assume that everybody's at least bought 2 challenges, some folks have bought 20, some folks have bought one, some folks signed up, never bought one. If you assume that very conservatively they all bought 2, that's about 1.8 million challenges sold. And that's a very like rough estimate. And if you do that across all the different firms, it is unbelievable how big the Forex space is. And so while we're distracted with this small section of the Forex influencer space or the Forex affiliate marketing prop firm space, whatever, the whole of the market is innovating at 1,000,000,000 miles an hour. And I'm hoping to kind of bridge the gap between the institutional guys, the regulatory guys, the big money businesses, the shadow liquidity that nobody sees, the influencer marketing space, the real kind of like back end low key traders that nobody knows, but are big, big, big money earners. Try to bridge the gap between the technology providers, between the brokers, between everybody. Try to give the trader, which is basically me, because I'm a nerd for this stuff. And this conference, selfishly enough, is because I want to learn. It's going to give me a holistic view about everything that's happening in the industry so I have my finger on the pulse. Okay? If you're going to be involved in something and say, I want to be a trader for life, you better understand the industry that you're in, see if it's going to be here or not. It makes sense on how they were able to fulfill payouts now. That part never made sense to me. Oh, that's the easiest part to figure out. At first, that's my issue with the business model, which is why we never went into it, because you're incentivized on people losing. We started a business model. People can talk shit about, oh, you shouldn't start a course if you're a trader, and you shouldn't do this, and you shouldn't do that. These people are fucking smooth-brained as anything. Because if they really cared about traders, they would focus on the obvious bullshit. Like when we were talking about how prop firms basically like there's a 1,000 traders here and they all take a challenge, right? They put their money in. All that money goes into a bank account, okay? Because these guys think they're trading, whatever. The majority of these people, let's say it's $1 million. The majority of these people do not make it to the final stages. 2 of them make it to the payout. Their payouts are 7,000 and 32,000. Let's assume it's a massive payout. Okay, so the firm pays 39,000, but they made $1 million off the losers. And so even though there's winners that make it through and they're having these big withdrawals, as long as you have more losers and more traffic, you'll have enough money. And so the whole race for the prop firms became, can we grow fast enough to build this cash pile so that when traders finally start winning, we have enough money to pay them out? Some firms lost this race, and that's why they all went under. And that's why a lot of firms started to deny payouts. Okay, because if you made $1 million, and let's say that you have 900,000 in payouts, is it easier to just give away all your money? For them, at least. Or is it easier to just deny a bunch of payouts and reduce your liability to 500,000, which is what most of them did. So their business model was straightforward from the jump, and nobody talked about it. Nobody had an issue with it. Okay, so the issue I have to pick with these people who are talking about courses is that there are people who will talk about great quality content, but then will fail to mention this bullshit and just allow traders to keep signing up for these firms and getting away with basically fucking over traders. Like that's a deceptive practice. Okay, so paying Telegram bots to comment and give you the illusion. It's like when you go on Amazon, you see the one with the most reviews and the highest rated. If it has 10,000 reviews, you're taking that more seriously because the whole point of the peer-to-peer reviewed economy of today, like the Uber model, where the only reason you trust getting a car with a stranger who could be Jeffrey Dahmer for all you know is because they've been peer-to-peer reviewed. Humans have said, yep, I've gotten this guy's car, didn't eat my face, you're good to go. That trust factor, what's it called? Airbnb. Have fucking strangers showing up to your house. These guys could start up a meth lab in your basement. You're letting strangers stay in your house. Why? Because both the host and the customer has been vetted and has been voted on and sort of peer reviewed. So with prop firms, the reviews that you see people commenting and all this stuff drives sentiment and drives the outlook for these firms. And if you're manipulating the sentiment through propaganda, through bots and all this other bullshit, then you're kind of deceiving people about the reality of how your firm is doing and the sentiment around your current performance, which is not good, right? Roy, have you heard of quarter theory? There's a 10-minute video. I highly recommend it. I'm good. Guys, do I look like the kind of person that's going to be watching 10-minute videos about trading? Just be honest with yourself. And I don't mean that to sound arrogant, like I know everything about trading. That's not what I mean at all. I'm forever a student. But at some point, you don't learn from videos. Like once you understand like what you're doing here, once you understand your job as a trader, why the fuck would I need a video? Honest to God. Now I understand that there are great concepts out there, like quarter theory, like standard deviations, like what does it say, moving average crossovers. These all work. I've used them to some degree in some fashion, and they all work. But for me, once I realized like my strategy is built on a combination of my studies. So I studied a lot of Wyckoff, I studied a lot of Elliott waves, and I studied a lot of really just Fibonacci and trend kind of like range trading. Now I already knew these, and there's also the market maker model, which sort of like is the first basis of the heartbeat. The heartbeat is like a more advanced understanding of the market maker model, how to trade ranges, how to look for certain discounts and premiums that came from Wyckoff, and how to look at that distribution. And then how to look at waves, highs and lows really came from understanding Elliott waves. Now, all that aside, I learned all this stuff years ago, and I was able to slowly apply certain concepts when you're looking at a blank chart to ask yourself, how does the market move? If I didn't have all this stuff in my brain about how markets if I just looked at a blank chart, where does my mind go? And I started to notice certain things like where are the absolute best entries, right? So for example, it really doesn't take a genius to look at this zone here and say, well, okay, so every single time the market got here, buyers stepped in, right? So I could have 1,000 of you guys in the group chat or in the comments section saying, but it's going to go down, it's going to do this. But if I trust my eyes, which for some people, they don't trust themselves enough in life to be able to just trust what's in front of them. They have to have someone else tell them. I trust my eyes above anything else. You can tell me whatever the fuck you want. I trust my eyes. It's a skill. I see that the market rejects every time we get here, that buyers step in every time we get here, and I'm not certain that the market is going to flip, but there's a higher probability of me buying at this zone than of me selling at this zone. So it's a discounted price. We're in a bullish market, and we're at an area of key interest for buyers where the market has historically respected. So I started to look at things like where are the extremes? And there's two questions that changed my trading that I would urge all of you to ask. So when I would lose, because I was losing I would have streaks of losing that were so bad, and I really just wanted to quit. I had a mentor of mine pose the question like, okay, you lost this trade. What did the winner see? So for example, like let's say somebody is selling today and then we buy and they lose. A great question for them to ask would be, what did Roy see today? Like what did he see that I missed that allowed him to catch this trade and that I saw this thing completely opposite? My strategy was based on that question because I realized I was doing the exact opposite of what I'm supposed to be doing. That's why I shat on baby pips so much last year. Okay, I'll give you guys the most basic example, the breakout trade. What most people expect of a breakout trade is a break above the range, a retest of the high of the range, and a continuation of that trend. Simple enough. Okay, and to some degree, markets do kind of work like this. And so if you're a new trader and you see this model, you get sucked into thinking, oh, this is the easiest thing ever. I'll just buy the breakout of the boxes. But then through experience, you learn something very important. So the model that I'm really looking at is there's fakes to both sides always. Okay, so imagine that the market starts to poke its head out, and then people are like, oh shit, I missed the buys all the way down here. Let me start to pile in. You'll see a 15-minute retest here. And so everyone starts to pile in, all the kind of like less experienced traders. Market goes up. They start to pile on more long positions, thinking the market is going to continue to their daily target, only for price to push all the way down and kick everyone out of their trades. Okay. Now, market breaks out of the bottom of the range. Now, these guys who were buying were like, oh, I knew it. I knew I should have sold. It's never too late. I think the market's going to end up all the way down here. Let me chase and start to sell the breakout. The market will do a smaller time frame retest, break out of the range. Okay. Retest again and start to drop, in which case they're piling on entries here. And then the market continues in the true direction. And so buying here, right? Or selling with a tight stop loss, selling here, or buying with a tight stop loss. All four of those are different trading strategies that are taught, and all four of those will completely crush you on a long enough time horizon. Okay, because you're doing the exact opposite of what the market is doing. And so when you really start to study things introspectively and you look at them honestly, you are your own video. And I know that kind of went on longer than expected, but you are your own educational source. The best education is always going to be inside of your trading results. If you look at the habits and the patterns and any consistent errors in your trading results, whether it's closing earlier, holding too long, duration risk, risk exposure, and you look at all these different elements of successful trading, you will find what you need to fix. When I do personal coaching with traders, not only, and the master class as well, not only do we teach what you're supposed to be doing in order to build a consistent system that has all the important facets like risk management, mindset, schedule, edge, and the rest, but we also show you how to understand the system, how to understand markets so that you can optimize in the future. Right now, most of the coaching students and the VIP members at Chart Addicts, when something goes wrong in their trading, they take a step back and they can actually pinpoint now exactly what's wrong. Is it the win rate or is it the risk and reward? Okay, it's the risk and reward. It's been dropping the past 2 weeks. What actions am I doing that is impacting my risk and reward? Well, I'm holding too long and the market keeps coming back to my entry. So even though I'm risking 0.25%, I'm not making 0.25% because it keeps coming back to my entry. Okay, so you know exactly what to fix in this car as a master mechanic, because again, trading should be mechanical. Roy, God, may you bring more blessings, more fruits, most humblest. Steve, thank you. What do you think about the UFC? I'm an absolute fan of the UFC. I pride myself on being the Dana White of the Forex space. Clearly, I need to, I got to work on my not giving a fuck, meter that's getting there. But I model myself after Dana White, obviously not in the personality and a bunch of the other stuff, but more so in, here's how I look at it. The UFC, when it first came out, when I was a fan, was this backyard brawling, kind of brutal Neanderthal sport. People saw it as gladiator fighting, that it was just too barbaric and it was too primitive. Bunch of guys beating the shit out of you, head stomps and all this stuff. And it was tough for them to get venues. And this is where the Dana White and Trump relationship comes in, because Trump allowed them to use his casino to host the first major UFC pay-per-view event. And that relationship kind of got built in, for the long term. But I see myself as that because the Forex space is similar. People from the outside and regulators and every single state commission and every single regulatory authority sees it as this Neanderthalish, dangerous, people can't handle it sort of thing. And we're going around doing events and everywhere that will have us. We tried to host the FX Summit in LA during the pandemic, and they said fuck no. We went to Vegas, they said fuck no. We went to New York, they said that we didn't even make it 2 feet in New York before we realized that wasn't going to happen. But Miami welcomed us with open arms. Okay, so when I, a piece of my heart belongs to Miami is because they showed us that level of respect, that level of, they want to do business. And everybody was desperate. It's like, oh, they only did business with you guys because they were desperate. Trump took the deal because he was desperate at the time. Yeah, so was everybody else. They didn't see the vision. Certain entities did, and so that's exactly what happened. Now, the UFC is the largest growing combat sport. Was the largest combat sport in the world, and the largest growing sports franchise in the world. Recently bought by ESPN. No, I think they have a deal with ESPN. They got bought by the Endeavor Group, which also owns WWE, if I'm not mistaken, and they became a multi-billion-dollar, public company. The FX space is going to have to go through that same route. Is it going to take me 20 years like it took Dana? Fuck no. All right, I'm moving very, very different. But the difference between Dana White and let's say PFL and Bellator is that those other companies didn't lean into regulation. They just kept going into these backyard brawls in every state or bar that would accept them. Every backyard for Alabama, whatever that they could go to. Whereas Dana White kind of, after a while, once you start to get that momentum behind you, you go to states where the athletic commissions are reasonable enough to, cooperate with you. So certain states in America, ideally, who would allow Forex trading. We could register a broker there, for example. And then one by one, you would have to just grow and you would have to gain leverage, build trust, do things by the book. So when fighters would fight outside of the sanctioned bout, everyone thought it was great for pay-per-views, but it would make Dana White's job so much harder, right? Because it would kind of look like it would prove to the regulators that these are just a bunch of brutes that don't have any self-control. So in the Forex space, this is why I've tried to elevate the standard. And even like the FX Summit is an opportunity for everyone to elevate the standard, be more professional, do things by the book, to try to encourage everyone to be that best self. All right, so it took 20 years for the UFC to take off. Is it going to take the Forex space the same? Well, we're already basically 10 years into this thing. So in 10 years, could trading Forex be as commonly understood as trading stocks and as Robinhood on everyone's phone, as MetaTrader or whatever, is TradingView on everyone's phone the same way that Robinhood is for the stock investors? I hope so. And that's ideally the future that we're trying to usher in here. This is Gold Info. Love your lives. Awesome stuff. Drop a like if you guys learned anything. Erica says dropping gems. Good stuff. All right. Let me know if you guys have any good questions. Chat's kind of dry today. I'm back in profits on all positions. If you guys took that first trade at 500, you can now close that trade and you can hold the bottom one, or you could just hold both. Okay. So that's seven. Where's 72? 72 is right here. That was my second entry. And then my first entry is now back in profit. So I can close that one or hold it. I'm personally closing it. But look at this 1 hour rejection. Absolutely beautiful. Can't get better than that. If we get a solid candle closure above the zone, we're good to go. We got 1 minute left in this 30-minute candle. And it looks like it's about to close. It's about to engulf the previous 30 minutes candle, which is a great sign. It's also going to close above that buy zone, which is another great sign. 4 hour, gorgeous rejection. Put a 1 in the chat or just list out your entry if you guys took the trade. So I had my stop loss 20 pips below the previous low, not where Roy had his, and lost. How do you know where to put the stop most accurately? Josh, how'd you get in this VIP chat, bro? Josh, did you take the what is it called? Did you take the masterclass? Gabe says, where's Golly? That's a good question. Why? What's up? Another stream, another wick. T, why you sound surprised, my boy? Golden 17,434. 459 is the FTMO entry. Good stuff. Oh, 459. Nice. 485. 454, Leo. Leo, what broker is that? 445? Nah, James, chill. Gabe says, I just miss him. Yo, let me tell Golly that y'all miss him, man. He's just been so busy with work. My boy also has a government contract on the side. And so, he out here doing tech stuff, getting it done. But don't worry, man. Golly's still around. Golly, get into it. Shane, what do you think about CTI, bro? I've heard about CTI. They're one of those legacy firms, City Traders Emporium. What's your take on that so far? Leo said I had an earlier entry too that was too late. Yo, Josh, I asked you a question, bro. How did you get into this group chat? Was it through the masterclass? Did you finish your exam and get your certificate? Okay, then how are you can somebody because okay, somebody answer the question about how do we find stop losses? Because Josh, I feel like you might have missed I don't know, like half of the class, and you should go back and review for sure. And George, how low below the lowest hanging fruit? Because some people will put it right at the lowest hanging fruit, thinking they'll be safe and get hit with a double bottom. What's the rule here for setting stop losses? What's like the comfortable cushion that we set, and where are we looking to put it below? Come on, guys. James, that's for the smaller time frames. So if it's like a 15-minute, you can get away with the 10 to 15. If it's the higher time frames, what would it be? It'd be double. My mistake, thinking I drew the fib from the last low. I didn't see the lower one you had. That's important, Josh. I think we found out what it was. So that's why like earlier on I drew both. And that's why I said I had the first entry at 750 and the second entry at 472. The second entry was based on, you get me? So that's actually a pretty big key. That would explain it because you probably understood the assignment when it came to putting the stops below the lowest hanging fruit. But that's the reason this is so dangerous, because if you thought this was the lowest hanging fruit and not this one, then you would have put your stops right in this liquidity range. So your stop loss would have been our entry. Okay, so finding the right zones, finding the lows and highs is first. That's your wax on, wax off. Finding the lows and highs. Totally missed the one you have, that's fine, but that's a big reason why I do these live streams, is because I did like honestly, you're not going to catch these in real time when you don't have the trained eye, but it only takes so many examples being demonstrated before it all clicks. And so the master class is, I know we say this all the time, but the master class is for the purpose of education, and these live streams are for the purpose of demonstration. I want to show you this stuff live in the live market environment to kind of get away from theory and get into live practice, show you how it really works. No stops and break even just yet. All right, that TP1 just as a heads at 16 or 17,600. Okay. This is gonna take a while. I'm not gonna put my stops and break even because I do expect multiple touches before we hit that take profit zone. So this is gonna be one of those come back after lunch and let it ride. All right, accept the risk. If you guys had two entries, you can close the worst of the two and hold the bottom one. As soon as you get that second retest on the smaller time frames and push. So let me see if I can find a good time frame that we could potentially see this on. Okay, this makes sense. So either a double bottom here, or the market pushes bullish and then comes back for the retest. Either way, there needs to be a series where there's an impulse and then one more touch, one more big savage retest to kick out all the stop profits and stop losses. Because chances are there's people entering right now with their stop loss just below this wick. And the market's going to give them just enough and then either come down and hit their stop profit or even hit their stop loss before it continues. Once we see the second retest and the market starts to break bullish, that's when we can protect the trade and then actually have the expectation that it will continue and we don't get kicked out. Little side note. Are you going to ever sell the recordings from the masterclass? We debate that all the time. We debate that all the time. If we are, I'm personally going to wait for the folks who already took the master classes to get their feet set. I want to bring those folks on as educators. I want to bring the people on this team on as team members. Once everybody's having that success, the payouts, everything else. We're dropping podcast interviews with some of the folks who've taken the master class and kind of just going through how it's affected their trading and how it's improved their profitability. If you guys have taken the master class, you've seen a change, a positive change in your trading, even if you've seen a negative change in your trading, reach out to me. Let's schedule a podcast interview. I would love to hear your feedback and get some feedback to folks at home. we're doing a 3-day accelerator. It's a boot camp sort of accelerator for mindset. If you're having trouble getting activated for this year, if you set New Year's resolutions and you're already kind of falling behind on those, if you're finding your goals kind of slipping away because you have family and you got work and you got the gym and you're out of shape and the relationship stuff and you're looking at social media and all this stuff and you're having trouble getting on track, the 3-day accelerator is for you. This is not only for trading mindset, it's also going to be for just general life mindset, setting goals, having confidence, really setting a perspective. I'm not here to show you guys like think positive and everything's going to work out. No, it's a perspective. All right. You're not doing the shit that you told yourself you were going to do because you're worried about people that you do not fucking know and what they might think. And then they're going to die one day and you're going to be left with fucking nothing. And your grandchildren will be left with fuck all because you're worried about some dude, some pixels on a screen on a social media post with a person that doesn't give a fuck what they're posting. They're just doing it for negativity. Okay. That's a perspective. That's a framework to realize that the reason that you're being held back is because of a fear of, ridicule or a fear of judgment. Once you realize that you should not take advice from people that you wouldn't take, or you shouldn't take criticism from people you wouldn't take advice from, that's a perspective shift. So this is not going to be like a Tony Robbins walking on coals kind of 3-day accelerator. This is going to be a perspective. This is going to be a put it down on paper and get clear about what you want sort of mindset training. And then the reality is most people just don't know how to set goals because this is not something that's commonly taught. Most people that we learn from, teachers and parents alike, don't know how to set positive goals. They don't know how to set achievable milestones to reach those goals. They don't know how to have an audacious idea for the long term, but a pragmatic approach for the short term. And there's a science to getting everything you want. It's a science and an art. And once you understand it, once it clicks, you never go back. So 3-day accelerator, looking forward to seeing you all there. Link is in the description. Make sure to check that out. JC says, my man gives us free sessions and don't like the video enough is crazy. Yeah, I mean, at this point, people just have their priorities fucked up. Like I learned so much from the guys. It's unbelievable how much I've learned about about trading psychology and like it makes sense. It makes sense. How do these prop firms that are just obvious scams have so many customers? It makes sense. And 90% of the people in this space are not here to take this skill serious. 95% of the people that play basketball have no aspiration of going pro. 99%. 99% of the people that do fucking anything have no aspirations of being great at what they do. Oh, if I can just make a couple bucks, then I'm just gonna. All right. They have no aspirations to be great. They just want to be part of the thing. They want to be part of the club. Oh, I play basketball too. Right? They're trash. They know that they're trash. They don't go practice. They just want to go and wear the jersey. You don't want to play for the team. You don't want to practice. You don't want to earn a position. You just want to put on the jersey and say you're on the team. That's what 99.9% of traders in this space are doing. I'm not even call them traders. Journeymen. So you guys want to beat the crowd? You guys want to beat the odds? Just don't be a journeyman. Be somebody who's committed to this as a legitimate skill set for the long term. And just like any skill set, once you have your foundational principles, then it's just all about experience, challenging yourself, pushing yourself to new limits, and just reaching the next level. Imagine you're a barber. How many barbers want to be a celebrity barber? Just be great at what they do. Most of them realize, like, okay, fade, I use these clippers. Like a bald fade, I'm going to go with this size first. I'm going to do this all the way around. They have a procedure. They're kind of like in the motion. Oh, I cut my friend's hair. Like I learned how to cut hair during the pandemic. I cut my kid's hair. Right? How many videos are you really watching trying to get great at this shit? You're just doing it to do it. Is that you're not taking the skill serious versus someone who's like, okay, what is the difference between head shapes that impacts these different haircuts? What's the difference between, the color of the hair and how short you should cut it because of the fade and how it's going to look. Like all these little things that you fix along the way, like specifics and really how serious you take it. All right. Good morning, Pop. So my dad is in the chat. Say W Ray in the chat. You guys know how it was in Lebanon, putting your name on the birth certificate costs money. And, my parents really couldn't figure out what to call us. And so there was 3 letters was enough. They said, Roy, Ray. All right, Roy. My brother's name is Joe. 3 letters. That's enough, right? You got to pay by the letter. What is this, crazy? They were gonna name me Bartholomew at first. They saw the price tag. They're like, all right, Roy, it is. I put W Ray in the chat. You guys are still alive here. I'm hopping off. Got tons of back-to-back meetings today. Excuse me. All right, the trade is in profit. Give it some time. All right, I'm gonna come back and say I told you so. We're gonna come back and post the recordings, and everyone's just gonna be like, "Oh yeah, yeah, okay, another trade won." Like every trade matters. So when this trade plays out, please just do me one favor today, which is don't take it for granted when these trades play out. Granted, I don't move the markets, but when we do everything correctly, when we execute appropriately, and these trades play out, exactly as we expected, there has to be a little bit of like, all right, let's stop and really recognize this real quick. All right, so hopefully you guys aren't getting too comfortable, and we're just gonna keep winning. Dad, I'm messing around. That was a joke. All right, my parents did not name me Roy because of the price on the letters. All right, in case you guys can't tell, satire. All right, just jokes, people, jokes. You don't pay per letter. Bro, before you go, how do we get the setups? How do we get the setups? God, please give me the strength not to spaz today. I'm starting off on a great note. No, I'm gonna spaz. It happened. What do you mean where you get the setups? I've been streaming for 2 hours. Oh my God. I'm gonna have to scroll back into this stream to where the trade was just sitting here. Was sitting right at the entry. And we were talking about entering this trade. And then like earlier in the stream where literally it got broken down about the price levels and everything that we're looking at, to entering the trade and being in drawdown and putting the second entry, to being in a little bit more drawdown, redrawing the fibs and finding an adjusted price, to getting that rejection and closing the second trade. What the fuck else do you want? If you haven't wrote down these levels and marked them on your chart, you really should reconsider whether trading is for you. The non-live setups. What the fuck do you need the non-live setups for? I'm so confused. What the fuck do you need what? Like, why is this trade not good enough? And what makes you think after this thing takes 4 or 5 hours to play out, there's going to be another trade today that I'm going to send out? Like every morning I'm out here taking trades. I'm taking one trade. It's like, just write down the level. Bro, no. Guys, I'm going to hop. I got to chill, right? Positivity on damn. Bro. So all the setups are live. All the setups that you need. Yes. Bro, if you're making money off these trades, it means you're learning the strategy and you will find us. Once you start making money with us, you can very easily find the link in the description. When you're not making money with us, you don't care to look. I get it, right? If you're taking these trades or you're at least writing them down and they're winning constantly, at some point you're going to be like, how do I get in contact with these guys, right? You might click that more button that's at the bottom of the video and just look at some of those links in the description and kind of figure out how to get in contact with us or how to get in the chats or whatever. But at first, you just got to study these trades. You don't need more. He says, bro, I'm asking a simple question. The simple answer is VIP group chat. The only way to get in is through a masterclass or to go through one of the coaching programs. But I'm answering this to you honestly, because 99% of traders who are on here have the same question. Did it go back to sleep? Oof. Now I'm going to light you up. Right? Now I'm going to light you up. Actually, matter of fact, that's what you want. So instead, I'm going to call it a day, sending you back to the obscurity of irrelevance. Take it easy, everybody. Happy and safe trading. If you're watching this, I understand that seemed a little bit out of pocket because of how I responded. Roy, it's a simple question. Why couldn't you just answer it? Ladies and gentlemen, you need thick skin to be a trader. If you get offended by what I say, for example, you got a lot of fucking work to do. I'm a nobody, right? Do I put money in your pocket? Well, yeah, I do. So hold on. Do I control what actions you do? Am I responsible for any of the ramifications of the decisions you make? The answer is no. I'm just a guy. Okay? So you guys cannot get offended by what I say. Number one. If you guys are getting offended by somebody calling you out or doing the thing, you're like, but that guy was so rude. I asked a question and he was saying all these mean things. Bro, suck it the fuck up. You are not 12. You are not fucking 12. Okay, that goes for everybody. The second one is, again, I know this seems like an innocent thing, but look, if I want to learn a very, very high technical skill that's very tricky, that crushes most traders, and I'm out here like I'm looking for the next thing or the more thing. First off, if you can't click the more button at the bottom of the description, which means that you are self-sufficient enough or resourceful enough to do that, big red flag. The second one is if you just got fed more information than most people pay for in courses, and you're out here asking for the hidden stuff or the stuff in the back, not realizing the value that was just in front of you, that's another major red flag. So if you guys don't think it's appropriate for me to address both of those, it probably means you don't have a single dime to your name because you don't know jack shit about trading. You don't know fuck all. So let me lead this dance and just take my word for this one. All right? He said, thanks for putting money in our pockets. Literally, you're welcome. All right? You're welcome. And more importantly, you learned a skill set that you can keep with you forever. So it's not just about the thousands you made or the hundreds you made on this trade. It's about, you know, the next 2 years added up. Roy, do not get in trouble with pops. I already did. I just lit this random guy up. I'm getting a call right after this. He said the non-live setup is crazy. I mean, I do send those, and they are taken for granted. But at the end of the day, like, fuck it. I would have ignored him after reading the yo-yo. Nah. Oh man. He said he's still asking. Yeah, some people got that mouth breather effect. He said Roy needs a nap. Ted's nephew. Well, I'm your uncle now, so change your name to Roy's nephew. Okay? He says Ted's nephew is crazy. No, he's Roy's nephew now. Put your name as Roy's son. Okay? Put the name tag. Look, oh, little fella, what's your name? All right, everybody, I got to hop off. Happy and safe trading. Please stick to your rules. If you lost money today, you can't make it back over leveraging. You might be on a roll, right? But over trading and overstaying your welcome will cause you to give back all your profits. So don't be an idiot. Beat the odds. Walk away from the fucking casino, right? They're throwing, attractive women at you on the way to go cash out your chips, trying to get you back at the table to keep trading. You are not 17 years old. You're not falling for bro, stop drooling on yourself. Wake up. They got the most beautiful women at the table. Hey, are you sure you don't want another game? Right? You log into your broker, it says take the trade. I forgot what broker it was. I think it wasn't Trader's Way. It was Trader's Way or IC Market. It was one of them. And their catch line was take the trade. I'm like, yo, hold on, bro. I'm trying to stop myself from trading today. And y'all out here encouraging the business. Like, this is fucked up. So be mentally strong. Do not allow them to drag you back into the mess. Walk away with your money. Let this trade play out, and I'll catch you guys on tomorrow's live stream. If you guys have any questions, you can find us in the description. Grab your tickets to the FX Summit. Once we announce the first speaker, these prices are going to full price. So from 220 to 400, from 550 up to 1,000, and from 2,500 to 3,000. Do not miss your chance to get half off tickets for the #1 most anticipated conference for traders and investors. Happy, safe trading, everybody. Take it easy. Oh, peace. All right, see you.